Hello and welcome to Restarting India. I'm Shireen Bhan and we're in conversation with the big bull, Rakesh Jhunjhunwala, his first interview in the COVID times. He joins us now to talk about the way forward for the markets, the macros and what he expects next from the government as well as the Reserve Bank of India. Rakesh Jhunjhunwala, always a pleasure. Many thanks for joining us here on CNBC TV 18. We've seen very volatile times in our markets as well as global markets. What do you make of the impact of the lockdown itself?
I don't think it's going to be as bad as people are making out to be. See, everybody has, and you press have played a good role in it worldwide. You have created, there has been created, I say right, there has been created a fear psychosis in everybody's mind. So nobody can think positive. Anything everybody can think is negative, right? And the impact of the slowdown, you tell me one thing, how many jobs by percentage have been lost in the organized sector? Today, there is a hit on the GDP. There is no question that GDP will be negative this year. But I can tell you one thing, Shireen, that if I had listened to economists in my life, I would have never made money in the stock market. Right? So the effect is there. The agrarian economy is not going to be affected. The service economy is going to be affected, no question about it. Right? But I think once things improve, the economy will come back with a bang. And if this economy leads to reforms, see, what India needs for prosperity is just ease of doing business. If that can be created in India, this COVID is not going to matter, in my opinion. So but as an Indian, I'm not blaming the politicians, I'm not blaming the bureaucrats, I'm not blaming the businessmen, I'm blaming all Indians. We as a society are not just able to take the decisions which will create ease of doing business and hasten prosperity in this country. It is needed, and if we can do that without COVID, this could be a 91, again a 91 movement for India.
Okay, you talk about the 91 moment, so to speak. You talk about the 91 moment, so to speak, Mr. Jhunjhunwala, but let me ask you this. On the back of what has already been announced, the package announced by the government, the reform measures announced by the government, the opening up of sectors, reforming the APMC Act, the Essential Commodities Act, do you believe that many of these measures have the potential to be able to provide the kind of trigger that the market is hoping for to ensure that the underperformance that we're now playing catch up with will be sustained in the long term? The momentum that's been built up in the last few weeks will be sustainable.
Shireen, the Prime Minister talked about land and labor. Nothing has been done concretely in the matter of land and labor. See, where I think the government is ready to act and announce is in the PSU disinvestment. I think which is very positive. I think the agricultural reforms they've done will change the face of Indian agriculture, right? The reforms about mining are really good. What we need is some action on the matter of land and labor laws and further ease in the number of forms we have to file, the ease of doing business. And why should we look at the attitude of we will get manufacturing when it comes from China? We have to build conditions where we are better than any country in the world for foreigners to invest. Let us look at it that way. Why do we look at it in a negative way? That because China will not get business, we should get it. And if we should get business, we should be better than China.
Yeah.
That is the way we should build ease of doing business.
I agree with you.
I think if the COVID results in reform in this country, I think there could not have been a more positive outcome of this COVID. And I agree
with you on China that we must stop boxing ourselves into this race against China. We need to ensure that we have our act together to get the funds coming in, irrespective of what China does or doesn't do. I agree with you there.
So
but let's talk.
Yeah, please.
Yeah, go ahead.
No, one aspect is, that I don't know, we as a society have to re-examine why this is happening. We have the skills. Tim Cook says that he takes manufacturing to China because Chinese software programmers are skilled. I mean, I can't believe that Indian software programmers are not skilled. So the question is why we as a society are not able to, despite having all the potential. And despite being an India bull, I'm also feeling now frustrated. That if we don't do it now, when will we do it?
What are you
I did not
frustrated
give
with?
proceed ever.
No. 1 second, 1 second. That's a big statement. Rakesh Jhunjhunwala, that's a big statement that you're making. You're saying despite being a long-term India bull, today you feel frustrated. What are you frustrated with?
Why don't we amend the labor laws? Some 3 states amended. The Union Labor Ministry comes up with some new facts. This is not how we can treat it. We have to take different political decisions. Without that, this country cannot come to prosperity. And with this kind of majority, which government will do it other than this? So I think we have to accept the fact that unless we see, you may be able to give food. I have absolute sympathy for the migrant labor, for the poor who have lost their job. But this is giving them fish. The only way we can teach them to fish is by having prosperity, by having growth. And for that, I may sound like a lecturer here, but the only way to do it is by reforming and getting ease of doing business. People are underestimating that if you create the ease of doing business in India, what kind of prosperity this country can have. I think 10% growth is then nothing. So I think if the COVID can relate to reform,
we are very far from that number at this point in time. But let me ask you about what you're seeing, and it's not just playing out in India, it's playing out globally. This disconnect between the markets and the macros. How do you see that impacting the way that markets are going to perform going forward, both global as well as India?
See, I will tell you one thing. The first effect is the abundance of liquidity. I have never seen such a fall in effective transmitted interest rates. See, interest rates in India were falling, but they were not being transmitted. This time, at least for the top level borrowers, there has been a real fall in interest rates. There is a real reduction in the savings rates, in the deposit rates. So what is the alternative you have today? State Bank is offering 3%, 3.5% for 1 year deposit. So money has to come to equities. I think that's one very big technical factor. Second, I will value a stock at its long-term earning potential. Now tell me one thing, XYZ stock, whether it earns 1,000 crores this year or 1,200 crores this year, it opens in June or it opens in April. I only want to know, will it survive? Will it have enough resources to be able to grow next year? So therefore, there is no question. If it has the resources, the market is looking at its long-term growth prospects. And people, if you look at the market, Shireen, it's a typical, these small caps were in a bear market from 2018 January. Now with this event, the large caps joined in, right? And typically before the start of a bull market, you have a severe fall which shakes out everybody. In 2001, September 11th was that event. And the index reached a level which was never seen again in history, right? So you had a bear market that started in 2018, just as the one which started in 99 or 2000. Then you had this severe fall because of the COVID. Now, and on the first rise, after the fall, nobody believes in it. Which is what, if you listen to CNBC and all your anchors and all your chartists, that's what it is. That everybody gives a buy call only because they are forced to sink the price. So I am hopeful. I remain the eternal bull. I am hopeful this may be the start of what could be a very, very long bull market. I have been wrong earlier and I could be wrong now.
Okay,
and I'm
yes, I'm glad that you said that you do have interest in the market. So, but that caveat aside, I hope that you are proven right this time around when you say that this could be the start of a long-term bull market. But, you talked about interest rates, you talked about the transmission impact. You're absolutely right.
Shireen, you saw Gully Boy, na? What did you sing? Aayega, aayega, hamara din bhi aayega.
I saw Gully Boy.
तुम्हें गाना है ना, आएगा आएगा हमारा दिन भी आएगा.
So, अपना टाइम आ गया कि आएगा?
अपना टाइम क्या है अभी? Nifty, where is Nifty? Where it was 2 years, 3 years ago. अपना टाइम आएगा जब Nifty डबल ट्रिपल होएगा 4-5 साल में, 6 साल में.
So we'll have to wait for that time to come. But let me ask you, because you brought up interest rates, and yes, you're absolutely right. We have seen the transmission take place. But what do you make of the financial sector? Because that is where there is a lot of concern on what the COVID crisis, as well as the slowdown, which was before the COVID crisis, is going to mean as far as financials are concerned. What will it mean for bank balance sheets? What will it mean for NBFCs, which continue to struggle? From the March lows, the Bank Nifty has recovered, but not that much. What's your take?
No, see, the markets don't like uncertainty. Now, as I told you, the only certainty is uncertainty, but the uncertainty in the banking sector is far more than in the other sectors. Having said that, I think, if you look at Mr. Adesh Gupta's report, which is so quoted, of Credit Suisse, the earning decline in most of the private sector banks in 22 are just 4-5% as compared to his projections earlier to the 21. There is decline. 22nd, for 22 there is only 5 to 10% decline of his earlier projection. But the price which analysts are asking us is half and 1/3, right? Because that is because there is uncertainty. But don't forget one thing: if you're bullish in India, you cannot have growth without interest, without banks. And I think post the COVID and post normalcy, it is only the banks who will have the liability franchise. So I think it will take time. I don't think you will see substantial recovery in the financial sector before November, December, when the clarity for the amount of default which comes out of this moratorium is clear. But I think at these levels, it is surely, I think it's an investable sector.
You still believe it's investable?
It's an investable sector. And Shireen, another thing which is very significant, I think, which is not being pointed out, that the ownership in the Nifty 50, Nifty 500 of the FIs has halved. It has halved in the last 3 years.
Yeah.
From about 44-45% has come down to 23%. So therefore, if we do things well, the FI exposure that can come. And they are right in being disillusioned that in the last 4 or 5 years, the market has gone nowhere. And they were making money, in the financials. And with the fall of the financials, whatever money they were making also has been wiped out. So naturally, that produces a very negative, negative thought process in the FIs. But one thing is that technically, I don't think we have much money in India other than the MSI money. So if we perform well, I think not only local, a lot of international money will come. And today also the differential interest rates compared to worldwide is very large in India. So technically, I think market is poised.
So you believe that we could see a...
What are you saying? Hello?
No, I said, so you believe that we will likely to see a return of the FIIs as well?
Yeah, if the market, if we perform earning-wise, surely they will come. Because worldwide, there's unprecedented liquidity in the world. It's unimaginable. Nothing is 3-5 times what it was there in 2008. So unless we have inflation, interest rates worldwide are going to... And as long as interest rates, as long as the yield on the S&P 500 is greater than the 10-year bond, money will flow into equity.
Yes, and that is what we're seeing happen globally. But you talked about the banking sector and the financial sector, and you believe that despite its current vulnerabilities, it is an investable sector. But let's talk about a sector that you've been very bullish on, and that is the talk of town right now, which is the pharma sector. The Nifty Pharma Index is up 48% from its March lows. There's a lot of talk on the renewed role and relevance of India's pharma sector. What do you make of this sector in light of the developments since March?
What I feel is that if Sachin Tendulkar is to hit a double century, he has hit 30-40 runs at the moment. Hello? Hello?
Yes, we can hear you. So is the pharma sector playing Sachin Tendulkar?
I am saying if you compare the move in the pharma sector to Sachin Tendulkar's double century, maybe we have played the first 30-40 runs. I think it's going to enter a long-term bull market. It has already entered.
Okay. So this is going to be one of the key sectors to watch out for, you believe, in your assessment, given where things are currently?
Yes, surely.
continue to like pharma, and this a lot of headroom for growth. That's the big message coming in from Rakesh Jhunjhunwala. If Sachin Tendulkar is on the pavilion on all course for a double century, then he believes it's only the start as far as the pharma sector is concerned. But what about metals, Mr. Jhunjhunwala, and what's the outlook there? We're also seeing a lot of policy decisions.
Pardon? Come again? Anyway, let me make a disclosure.
What about the metal sector?
I am very much interested in the pharma sector. You please take all my advice as with a pinch of salt. Okay? Next.
I know that. That's why I asked you about pharma, because that is a sector that that you've been a big bull on for a very long time. But I was asking about metals because, again, we've seen an opening up, commercial mining, which has been long pending, once again back on the table. What's the outlook there specifically?
I think the outlook is good. See, the way the stocks have been beaten down black and blue, as if there is no tomorrow, right? I personally think some of the most profitable investments will be those which are made in the most beaten down strips. What you only have to see is, will they survive? Can they withstand the losses which may be incurred? I think if they survive, the most profitable investments are in the most beaten down stocks. And metals are among them.
But,
yeah.
Okay, so you believe that they've been beaten down the most, or amongst the sectors that have been beaten down the most, and you believe that that could see a turnaround as well. Where do you see the most vulnerabilities outside of the banking sector, for instance, where there are obvious vulnerabilities? Where do you worry about an existential issue, an irreversible damage or dislocation? Hospitality, tourism, aviation, what's your outlook?
No, I think aviation will take time to come back. And I have concluded one thing, it's, let us not forget Mr. Warren Buffett's original statement that you want to make a millionaire making by airlines. So I think it's best we keep away.
But so I think keep away from aviation, but what about other sectors that are seeing a massive dislocation today because of COVID?
I think hotels will come back. See, there are industries which were in a depression for the last 5-6 years. Now, I think this fall or these circumstances is the climax for them. And I include construction and hotels in that. Right here. I don't think it will get worse than this. So I think aviation, I believe that construction and hotels, I think, will come back. And restaurants will also come back over here. Ma'am, it's, I need to go to Golden Dragon and eat food. Ordering from Golden Dragon doesn't satisfy me.
Well, for the sake of restaurants, I hope there are many more who think that way now that restaurants are going to be allowed to reopen, at least in some parts of the country, starting the 8th of June. But, I want to talk to you about consumption in general.
Well, I think discretionary consumption could take a hit in this year. But other consumption will be there, essentials. I think there could be some bump up in purchase of cars and vehicles for transport. See, Shireen, in general, I'm not as usual, I would say. I'm not as bearish and as concerned as everybody. I think that there's such a fear psychosis has been created that people just can't think anything but negative and fright. Things will turn out better than expected.
Yes, that's very clear from your commentary so far. You believe that it's going to do better. But, I want to stay with the consumption theme for a little bit longer. And you're absolutely right that there is this fear psychosis, and one is still trying to understand how this is going to play out as far as consumer behavior is concerned. FMCG, what we're seeing at this point in time is staples continue to move ahead. But, there is likely to be down trading, or at least there are already indications of that. How do you see this, from different sectoral perspectives on this change? Yeah, that's my point. That's what I'm trying to get from you. How are you reading this?
Shireen, my question is, I'm not concerned. See, there may be 5% negative growth this year. There may be some fall in SMG consumption. But I think if we take the right decisions, I think next year there will be 15% growth. So all consumption will come back. So I say, what does this 1 year matter? Mr. Rahul Bajaj says, what is 2 years in the life of a company? So, why should I speculate whether SMG consumption will go down, this will go down? Company will survive. If they survive, they will do very well. I'm a long-term investor. That's what I'm looking at. I can't predict whether SMG consumption will go down. People will drink Coke, not drink. I know they will drink liquor and cigarette. That I'm sure. Right? So the question is that, all this speculation of FMCG will go on, Dabur will go up, Dabur's products will go, Nestle's products will go. I mean, it's something we can't predict. But I think consumption will be, in general, things will be more optimistic than what people are estimating. And I'm concerned about the long term.
Okay. Okay.
If my company can survive this fall, this down, with the interest rates being what they are going to be, then I think I'm happy.
But before I let you go, given the fact that you believe that this could be the start of another very strong bull market, in the near term, what are the risks specifically for India that you foresee in the near term, even though you're bullish in the long term?
Well, I think there are 3 risks. No reform. I think that's a risk. Second is, the recurrence of a very, very abnormally large increase in the number of cases. Right? And I don't see any third risk. If we don't seize this opportunity and we don't reform, I think that's a risk. And the status quo is going to remain. Right? And then we'll have to 5, 6, 7% rate of. And second thing is that if we have a very big increase in the number of cases, then that could be a risk. But that could delay things. It could not end things.
The 2 top risks that you're... Yeah, that will delay the recovery is what you're pointing out to. If we continue to see this sort of protracted reopening, and what we are seeing is that, the centre announces something, state governments are still worried or more conservative to open up, and there is confusion. Today, for instance, we once again seen state borders being sealed by various district authorities. If this reopening is going to be long drawn and protracted, what do you believe the impact is likely to be, especially on corporate earnings?
See, my earning is that my estimate is that after 30th June, everything will open. Right? Still, this month, a lot of states, it may differ from state to state. And I think Bombay, which is worst state, also will open after 30th June. Because the containment zones in Bombay have become half in the last month. And what is the second thing you asked? See, I'm not very much concerned, Shireen, as I told you about corporate earnings this year. Why should I be concerned? Is it going to matter if any XYZ company has ABC or DEF this year? As long as they can survive and the ability to grow next year, I'm not concerned what the earning is this year. I'm not able to predict it, right? And I am not concerned. As long as company can survive, India is going to grow, in my opinion. And that company is going to make profits over longer term. So all this emphasis on what this company is going to earn and all that, I don't feel is so important.
Okay. You talked about disinvestment, Mr. Jhunjhunwala, and that has been a big theme that you've been pushing. Now, given the fact that the government has come out and said that it is going to draw up a list of strategic sectors, non-strategic sectors, in non-strategic sectors, they're going to try and bring down the number of public sector companies, etc. We're still awaiting details and clarity on this, but this has been a long-drawn process for the last few years. It's been underway. So how are you reading this whole disinvestment theme as we move forward?
See, I don't want to read into anything government says before it acts. Because government announces so many things, it doesn't act. Let us see how they act. Let us see the putting of the words into action. If they do it, they will be the biggest gainers, this country will be the biggest gainers. Because if you have a coherent disinvestment policy, I think every public sector stock in general will double in price. The biggest problem is we have no coherent disinvestment policy. And by not, because you keep selling shares in triplets, if you list LIC and then you say every year I will sell LIC is not going to get a value. Second, so there is no coherent disinvestment policy and you are having the inefficiencies of a public sector concept, continue. So if government disinvests, the kind of gain this country can have is unbelievable. But I will now believe what they do, not what they say.
I guess that makes sense. And you're absolutely right that there is a need for a coherent strategy on disinvestment because it has been going back and forth over the last several years. And you believe that that could provide a much needed trigger for this entire PSU basket.
No, 3 BJP state governments, they amend the labor law. And then the central government says not allowed. Did they not consult the central government before that?
So do you believe that a lot of the policy intent, do you believe a lot of the policy intent is getting lost in execution, getting lost in translation, and a lot of the intent is falling between stools?
That is apparent. I think that's apparent to everybody. We have to understand the sense of urgency and act faster.
So would this not qualify as a key risk then?
No, but I'm hopeful it will happen. See, everything is a risk.
You're hopeful.
With the way the public sector is priced, I think everything is priced in. Most stocks and 6, 7, 8% yield.
So you believe, right. So you believe that this has been priced in, at least as far as the PSUs are concerned. Final question to you. You continue to be a bull on India. You continue to be a big believer, not just in the Indian macro story, but also in the Indian market story. So leave us with your key takeaway on what's looking most exciting today.
Well, what's looking most exciting is that the COVID is opening up. And Shireen, I was a bull until today, now I'm a hopeful bull. Because I think unless we act as a society, that bullishness will not play out. So until today, I was a sure bull, now I'm a hopeful bull.
So there's been a little bit of a shaving as far as your bullishness is concerned, because you believe that there is a difference between talk and action?
No, I believe that as a society, we have to take certain important decisions and make change. Without change, we will not realize our true potential. I mean, until today, I believe it will happen, but now I believe it has to happen now.
Okay, so Rakesh Jhunjhunwala qualifying and caveating. He is a bull, but much more of a hopeful bull today. And he is going to want to see the talk being followed through by action and execution on ground. Always a pleasure. Go ahead.
I am hopeful that we can take actions which can lead us to 8, 10, 12% growth. Even if we take some action and it will lead us to 5, 6, 7% growth, the stock market may be in a bull market. Right? But we will not be realizing our full potential. I, as an Indian, want us as a society to take the decisions by which we can realize our full potential. So I want to qualify 2 things. What is stopping us and our prosperity?
All right. Thanks.
No, Shri, what I'm saying here, what is stopping us and ultimate prosperity is only ourselves. All of us. Let's not blame each other. And unless we take those decisions, we will remain at 5, 6, 7%. We'll never go to the kind of growth China is seeing. And once we take those decisions, I think we'll surpass China in growth. China's growth story we can surpass.
Okay, well, let's hope that there is that sense of urgency that you speak of and that the distance between talk and action is bridged. Rakesh Jhunjhunwala, always a pleasure. Many thanks for joining us here on CNBC TV 18 with your thoughts on a post-COVID world, what it means for India, the Indian stock markets, as well as the Indian economy. A hopeful bull is how he'd like to qualify his position at this point in time. Always a pleasure. Many thanks for your time here on CNBC.